Hello and welcome. Thanks for joining this session brought to you by the experts at ProTax Accountant. Today, we're going to tackle a big topic, UK tax relief for the 2025-26 tax year. Our one and only goal? To help you understand it so you can stop leaving your hard-earned money on the table. Ready to dive in?
All right, let's get right to it. I want to ask you a simple question. Have you ever looked at your payslip and had that nagging feeling that you're just paying too much tax? That some of that money should really be in your pocket, not HMRC's? Well, if you've ever felt that way, you are in exactly the right place. Take a look at this number, £1,200. What's so special about that? Well, that's the average tax refund for people who actually take a few minutes to check if they're due any tax relief. And the crazy thing is, most people who miss out aren't doing it because it's super complicated. They just don't know where on earth to even begin.
So, today, we're going to change that. Here's our roadmap. We'll kick things off with a simple guide to tax relief. Then, we'll get into the nitty-gritty for employees. After that, we've got a playbook just for the self-employed, followed by some serious saving strategies for business owners. We'll also shine a light on some common tax traps to avoid, and then, most importantly, we'll wrap it all up with a clear action plan you can use. Okay, let's start at the beginning. Section 1, your guide to tax relief. We're going to get to grips with the fundamentals, because once you understand the basics, everything else just clicks into place.
So, what on earth is tax relief? It's actually pretty simple. Think of it as HMRC's way of saying, hey, we know you had certain expenses or situations, so we'll give you a bit of a break on your tax bill. It just reduces the total amount of tax you have to pay. And here's the most important part. This isn't some shady loophole. It's your right, and it's there for you to claim.
Now, here's a pro tip, and this is absolutely crucial for the 2025/26 tax year. The personal allowance, that's the amount of money you can earn before you pay a single penny of income tax, is frozen at £12,570. Now, why does that matter? Because with prices going up, a frozen allowance means you're effectively paying tax on more of your money. It makes hunting down and claiming every single relief you're entitled to more important than ever before. And speaking of paying tax, here's something a lot of people don't realize. Your postcode can actually change how much tax you pay. As you can see, the rates for England, Wales, and Northern Ireland are pretty straightforward. But if you live in Scotland, it's a whole different ballgame. Let's imagine a guy named Angus from Edinburgh. If he earns 55 grand, he's paying a 42% rate on part of his income. His friend in Manchester earning the same, only 40%. It's a small difference that really adds up, and it's so important to know which rules apply to you. Okay, let's move on and talk about something that applies to millions of us, being an employee. Because the key to unlocking potential tax savings is probably something you look at every month, but maybe don't fully understand. It's right there on your payslip, and we're about to decode it.
So let me ask you straight up, do you really understand your tax code? You know, that little combination of numbers and a letter on your payslip. It's not just random code, it's the instruction that tells your employer exactly how much tax to take from your pay. And here's a wild statistic for you. It's estimated that 1 in 5, that's 20%, of tax codes are wrong. That leads to billions with a B in overpaid tax every single year.
And those letters, they matter a lot. Most people will have an L, which is the standard personal allowance. If you see an M, that means you're getting a slice of your partner's allowance through the marriage allowance. But a BR code? That's a huge red flag, especially on a second job. It means you're being taxed to the basic rate on every single penny you earn with no tax-free allowance. And the K code is a bit unusual. It means you have untaxed perks that are worth more than your allowance, so you need to check your P11D benefits form right away.
And look, this isn't just some abstract tax theory. This is real life. Take Priya, an NHS nurse in London. She had a second job, and it was put on a BR code. That meant her entire tax-free allowance was being ignored for that job. The result? She was overpaying tax by £1,200 a year. Every single year. That's a family holiday, right there, lost to the taxman until it was finally corrected.
So how do you avoid being the next Priya? Here's a super simple tax code health check you can do. Find your code on your payslip, decode the number, it's usually your personal allowance with the last digit dropped, check the letter. Does it all make sense against your income? And here's another tip. If you see W1 or M1 next to your code, that's an emergency code. It means HMRC is guessing and you need to get it fixed. This whole check can take less time than making a cup of tea, and it could genuinely save you a fortune.
All right, changing gears now. We're moving on to the self-employed playbook. So if you're a sole trader, a freelancer, or even just have a side hustle, this next part is 100% for you. Let's get into it.
Before we go any further, there is one golden rule you have to burn into your memory. For any expense you want to claim against your tax, it must be, and say it with me, wholly and exclusively for your business. Not mostly for your business, not 99% for your business. 100%. This is the bedrock of all self-employed tax relief. Okay, so with that rule in mind, here's a quick 5-point checklist to help you get started. Think of it as a quick financial health check. Gather all your documents, get a rough idea of what your tax bill might be, and then start hunting for those big reliefs. It also helps you spot any traps, like if you have multiple income streams, and flag if you think you've over or underpaid. And let's look at the difference this can make. It's huge. Say you're self-employed and you've made £35,000. If you don't claim any expenses, your tax bill comes out at nearly £4,500. But if you find just £4,000 of legitimate, wholly and exclusively business expenses, boom, your tax bill drops by £800. That's £800 that stays in your bank account, not HMRC's. So what kind of expenses are we talking about? Well, did you know about these? If you have a small side hustle, there's a £1,000 trading allowance. You can earn up to that much without even telling HMRC. Working from home? You can claim for that. Driving for work? You can claim mileage. And this is a big one people miss. Paying for an accountant to do your taxes? Yep, those fees, like the ones you'd pay to pro-tax accountant, are themselves a tax-deductible expense.
Right, now we're stepping it up a gear. Let's talk about mastering savings for business owners, specifically for those of you running a limited company. The savings here can be absolutely massive, but you've got to know the rules. Just look at some of these key reliefs for the 2025/26 tax year. R&D tax relief, if you're doing anything innovative, is just incredible. Then you've got capital allowances, which could mean buying a £40,000 van and paying zero tax on it that year. And don't forget, any money the company pays into your pension is a fully deductible business expense. These aren't just little savings, they are absolute game changers for a business. I really want to stop and focus on this number for a second. 186%. No, that is not a mistake. For small and medium-sized businesses that are investing in research and development, this enhanced deduction is just mind-blowing. It means for every pound you spend, you can reduce your profits by almost £2. It can literally turn a tax bill into a cash payment from HMRC. Okay, stay with me now because this next part is so important. We're about to talk about tax traps, and knowing about these could easily save you thousands of pounds. You don't want to miss this. All right, let's dive into spotting common tax traps. Think of this section as the stuff HMRC won't exactly shout about from the rooftops. This is the knowledge that helps you avoid the simple, common, but very expensive mistakes that so many people make. So let me ask you this, and be honest. Do you or your partner earn more than £60,000 a year? And are you also claiming child benefit for your kids? If you just nodded yes to both of those, then you need to pay very close attention because you might have accidentally fallen into one of the biggest tax traps there is. It's called the High Income Child Benefit Charge, or HICBC. What a mouthful. Basically, once one of you starts earning over 60 grand, HMRC starts clawing back your child benefit through an extra tax charge. But, and this is a huge but, there's a way to fight back. Here's the pro tip. You can reduce your income in HMRC's eyes by making pension contributions. Look at the example. Making an £8,000 pension contribution could completely cancel out an £1,800 tax charge. That's just smart planning. That's not all. Here's another one that catches so many people out, the emergency tax trap. This usually happens when you start a new job. Your new employer doesn't know your tax situation, so they put you on a temporary code that often ignores your personal allowance. The result? You overpay tax. The fix, thankfully, is really simple. As soon as you get your P45 from your old job, give it to your new one. Done. Whew! We have covered a lot of ground. So let's bring this all home. It's time for the most important part, your action plan. This is where we turn everything we've talked about into actual cash savings. Okay, if you forget everything else, please remember these 3 things. Number 1, verify your tax code. Seriously, log into your government gateway account today. It takes 10 minutes tops. Number 2, if you're your own boss, track
Everything, every single wholly and exclusively expense. Use an app, spreadsheet, whatever works. And number 3, don't assume anything. UK tax is not one size fits all. The rules are different in Scotland, for second jobs, for high incomes. You have to check. So now you're armed with all this knowledge. You know what to look for, you know the traps to avoid. But here's the final question. Are you 100% confident you can put it all into practice by yourself? Because for a lot of people, that's the biggest hurdle.
And that really is where having an expert in your corner can make all the difference. For professional, friendly guidance on tax relief, or frankly, any other accounting questions you might have, get in touch with Pro Tax Accountant. The best way is to send a message on WhatsApp or call them on 07985 689912. Or, if you prefer, just send an email to info@protaxaccountant.co.uk. I really hope you found this session useful and that you're walking away with a few things you can action right away. If you enjoyed this, make sure you subscribe to the Pro Tax Accountant YouTube channel for more practical guides just like this one. Thank you so much for your time.